All right, gang. So, welcome to Forward Focus. I am about to head to Las Vegas for the money show here this weekend. So, I will be sending you guys some links so that you can access that live webinar as well. That's going to be on Wednesday at 2:15 Vegas time. So, 5:15 Eastern. And we're going to be talking about signs of trend exhaustion. So, I've given that class a few times, but every single time I do it totally different. So if you've attended before, you will want to attend again. They're actually like, Toni, you need to change the title next time. But I like to kind of beat things into you guys sometimes, right? Make sure you know exactly how to view signs of trend exhaustion. I know. The beatings will continue until morale improves. All right, let's flip on over here and take a look at the charts. I, I know I need to work on my trading partner here. My little guy, he's 7, he turns 8 this summer, and trying to teach him some of the basics here with technical analysis. And this morning he was very distracting. Had some trades on. He's like, what do I do? What are we doing? What are you doing? Focus, child. Is that my retirement plan, Sean? Of course. I'm going to have him take over the empire. Ha 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 ha. So this morning, let's take a look over here at our charts. We are going to go look at the larger time frames. And of course, we are reacting to the upper end of this megaphone here on the weekly time frame in the indices. We actually didn't fully test the upper trend channel limits, but as I mentioned to you guys before, that doesn't always happen. A lot of times it just comes up into that zone of those previous highs and slightly higher highs. It doesn't always fully go for a retest of that upper trend line. What you can look for in many circumstances, wasn't actually the case here, is that a lot of times this will go and give you a two-wave, basically a 1, 2, 3 pattern like that. So you'll see a pause here around the midway point. It's usually around 61.8% of this drop. And you'll see that pause and then it will go up. And so you can use that kind of measured move to help with identifying those highs and where that's going to hold. Again, we didn't really see that happening here this time around because you can't see a nice little kneecap in here. But that is a trick to use when you see the megaphone forming. So what we had happening on the indices is a little bit of a 2T-ish type of action, a little bit of a steep one, where it went and did the two-wave move like that. So here was our pause, here's our continuation, and this has rolled over with a shallow avalanche. And what that means is that you'll get a pivot that holds, you'll get a two-wave correction, you'll get a two-wave base, and then you'll get breakdown where momentum usually picks up with a two-wave move. So this is what a core one will look like if you were to draw like your template for it. It can also go out about twice as long. So sometimes you will see it base out to about here and break down. So that's a shallow avalanche. And that happens a lot when you have this pure pivot high holding without it trying to go to slightly higher highs and rounding off at highs. So it just starts out gradually and then builds momentum. But there's many variations for how this can form. So it's not always clear cut like this template. This is your pure template, but sometimes it will even look like this. It'll look like that and go, and you won't be able to see purely just two lows because it will look like there's three, and it's kind of turns over at this point, goes up and then breaks down. It can also go like that. So it'll start out slower, then kind of tilt again with the two waves. So you're looking at it in segments and then gain momentum. So those are just different variations of how this happens. And we've seen a lot of this in recent days, recent weeks, especially with the way the market's been dealing with previous highs. I do think on our daily charts, even though momentum has picked up in here, I wouldn't totally rule out that we could go for a 2T. It's going to be harder now than it would have if it hadn't totally turned around with the increase in momentum here. But I do think it is still a possibility. It's really going to come down to momentum on smaller time frames. Yeah, it's kind of hard to see some of those patterns sometimes, but once you get like the feel for like the general idea, the general concept of how those turnarounds happen, then it kind of starts out slowly and gains speed. Actually, Harvey nailed this in the other day in the room when we were breaking down out of the trading range. Here, I'm going to show you on the Russell. He was like, I know exactly how this is going to play out. It's going to start slow and then pick up because that is what it does. I'll show you this on the intraday chart. So it's coming off this zone here. Starts out slow, then just kind of picks up momentum. So that's actually what we saw intraday the other day coming off of highs. If I show it to you on the NASDAQ, right at the very high, you'll see that same thing. And go down. Let's see if we can see it on the 200 tick. Here we go. Right in here. So what we were looking at, League of Traders, was the measured move here is also a bigger 2T on a larger time frame. And then you can see how it starts kind of slowly here, then goes into more of a base type of move, and then starts to pick up momentum. That's a normal way that a top can form when you don't go and get slightly higher highs to round it off even further. So it kind of starts off slow, then gains momentum. Head back over. And this is another example. Actually, this one's close to the textbook one that I drew you. There you go. So you got your two wave down, you get your two wave base, and then it picks up. And it's usually a two wave continuation. Same type of thing over here, but again, this one's much, much messier. So it happens a lot when there's more of like a closer pivot where it tries to turn around really fast. Then it starts off slow, and then it can build steam after that point. But it's definitely a trickier market. I know it's a lot harder for you guys to see this than it is some of the other patterns. So when things turn around a little bit faster, you can get more like a typical 2T pattern like that. So it shifts the momentum to the slightly higher highs, and that helps it turn and pull back faster without necessarily giving you that slower start and turning back around. So let's go back into some of the intraday charts here. And the 240-minute time frame, what I've been watching here on this one, and this is of course the shallow avalanche right here. This is kind of your original downside move, and then this widening wedge here is your sideways move. And then here's your two wave main moves down out of it. Again, it's harder to see here, but the pattern is still there. It's just not as clear cut as the one that I just showed you a second ago that had a cleaner template. So right now, we're at a pretty good zone of support. We're seeing things kind of trying to shift here, some slightly lower lows. This could easily hold out into next week a little bit better. I know some folks were asking about continuation short here intraday, and I'm not really too excited about that. I did some trades as just like scalps on the intraday chart here on the lows, but I don't really suspect we're going to see strong selling into the end of the day. Of course, we've got a news-driven environment right now with the trade war stuff and the trade tariffs. So that's been in the news, but pretty substantial gap down last week, or at the beginning of the week rather. Right now we are moving off of a bit of a 2B type of pattern. So this is the question that I had. Is this two-wave move a good one to short? Well, scalp, yeah, it was okay, but larger time frame for continuation, no, not so much. And that's because of the trend placement that we've got going on the 240-minute time frame. So we actually have a nice 2B here that triggered right as we're going into the forward focus session. And so I'm looking for this to kind of just hold in a range over the next couple of trading days, early into next week. We are at decent support on the daily time frame because when we look back at the past and we look at typical correction type of moves that are happening off of pivot highs, notice the first zone of support is right about where we are now, even coming off of the low into resistance. So some of them certainly can go a little bit further, but we are at that first kind of limit as far as like impulse moves go for support here on an intraday time frame. So this can develop into something that can pull back a little bit sharper. And actually with megaphones, what we see with megaphones is that a lot of times the momentum does pick up. It does go pretty fast. Since we didn't quite make it up to that high, there is the potential to try to do a 2T, but with a megaphone, that doesn't happen as often. So that possibility that I mentioned earlier, because of the larger pattern here, it's just not as likely. So overall, I'm going to be more on the bearish side as we go over the next, basically the next month or so, next couple of months actually. Let's go look at the S&P. So the last couple of weeks, we've also talked about diving in and looking at individual securities that make up the larger indices, a lot of the individual components. By the way, measured move here. Some initial resistance on this. So a lot of the individual components in the indices right now, they are exhausted, but many of them had room to try to push for some slightly higher highs. Given what we're seeing on the overall market with the way things sold off here today, I think they're going to be a little bit trickier. I'm going to go back and look through the indices again here over the weekend. But I would use a little bit more caution as far as trying to even get swing trades on the long side right now. I think you're going to run into a lot of traps. Let me show you guys what's going on here on some of the FANG stocks here. So we got Facebook. Pull up the monthly on Facebook. So what we're looking at on the monthly on Facebook, my volume's kind of weird, but is, I was just trying to go for like a second move. It had the measured move right here. So what I was keeping in mind, can this try to go for a slightly higher high? Can it try to go and do a 2T? So on that weekly time frame, there's certainly the room for it to try to do that. It doesn't have to, but there's certainly room for it. When we look at the daily chart, kind of look at the detail a little bit more, what we'll need to watch is how does this momentum continue to unfold here? If this manages to pull back up and go into another base, basically about the same amount of time as here, that's what it would need to do in order to have another strong move up. So I would want to see it basically hold here, not try to pull back further. If it pulls back farther, then you end up with a sideways base, and then you end up with more of a time and price base. So you've got a time correction, and then you would get time and price correction. And that has a harder time reacting and continuing higher. The odds of it doing a full scale strong bounce decrease when you have the price correction following a time correction. When you have more of a price correction and then a time correction, you have a really high probability of a strong break. Netflix. So Netflix is kind of trying to roll over here. So what I was looking at on this a couple weeks ago is it's basically at a wipeout type of zone. And what I was watching was, can it go and do essentially a tilted Phoenix and manage to break higher? But this was sort of the do or die point for it to try to do that. So you can see that it had the slower pullback here with the 2 of correction. And it needed to go at that point. So by pulling back here, that actually decreases the chances that we can get that stronger continuation now on this one. It's kind of an odd spot for this to try to sell off really well, but right now that is what it is looking like. So an avalanche or 1, 2, 3 here. Google, of course, crashing still. So what we were looking for was continued downside on Google. And that's what we've seen over the last week. It's been kind of slow, but that's also pretty normal given the size of this gap. And I do suspect that this is going to continue. I don't see any strong recovery odds on this one at this point. So usually this megaphone is going to continue to head lower. Amazon, of course, is holding right smack at that 100% extension that we were looking at over the last couple of, well, the last month or so, really. So on the weekly and monthly time frames, we have a two-wave move, but what we had the potential for was for this to try to go and do 1, 2, 3 here. So it would have had to have gone and broken through that 100% right here. And you can see it just didn't hit there and round it off. So other times you see the same pattern happening on the weekly time frame and on the daily time frame. What can happen is it'll come up, it'll do the Phoenix, and then it will do 1, 2, 3, and then go up into the high. So this is what we were looking at as a possibility a couple of weeks ago. But the way it's rounded off at highs with the overall market and then with the tariff news, it's just not being able to do that. And now it's gone too far as time development to really sustain that type of a move as easily. So intraday here, you're getting into territory where this can go and develop into shallow avalanches, do 1, 2, 3 patterns, other continuation moves that can bring this lower. What are my thoughts on volume in combination with price on analyzing trends? The most successful way that you can use volume is when you're dealing with the inside of a zone of congestion. So if you get your strong move up to the upside, what you want to watch for is steadily decreasing volume. And that's usually going to tell you, hey, this is going to get ready for a breakout. So you want like the lightest volume of the entire pullback, and that's going to give you your signal. Now, you'll notice here this did come back and retest support. So you can also use this in combination with your Fibonacci fan tool. So if your first low hits the 76 or the 61.8 or the 50%, then you want your setup to line up with the 76.4. So this trigger here where the volume is actually at its lightest had not quite hit the 76.4. So what that tells me is that if you enter a trade like this, you might only get like that smaller measured move to start with, and then you might get another correction before it gets going. And as long as you know that that's a possibility when you go into a trade, it's much easier to hold through it and not just get flushed out with stop levels like under the low of the base, but actually watch and keep your stops kind of trailing up under that 76.4. So that's the best way that you can use volume. Other people will look at it. So another way you'll see it, and let's see if I've got any examples I can show you. Well, even back over here, is the volume spike. So when volume spikes on a move to the downside, that can indicate exhaustion. But what's interesting is that it doesn't necessarily mean that the trend is done. It can mean just short-term exhaustion, and then the trend can still continue and go lower. Actually, this time around, volume's not quite what you normally see. I guess there's a little bit of a shift, but what you'll usually see is the first largest sell-off if the momentum is much stronger than average. That's when you'll get the biggest spike. Then it will go to lower lows, and you'll get a little bit of a smaller spike, even though it has a lower low. And then it can go to a third low, still get a spike again, but again, that even as it's heading to lows, the volume spikes will decrease. They'll still be sharper than they are as a whole, but they'll tend to decrease. There's a little bit of decrease here this time around. You can see this is the highest volume. This is a little lower, and that's a little lower. So that's totally normal activity for exhaustion moves. So you can watch that volume too when you're in a trade and you're looking for, where can you take gains based on using volume in addition to things like measured moves as well. It's just not as useful as looking at the volume decline for the continuation moves. The volume decline where you get the lightest volume and getting your entry trigger based on that lightest volume, that's a lot more of a useful way to use volume. As far as like actual practical applications. So a lot of times you're not going to see this volume spike even. When you're trying to position your trade, it's going to be really hard to kind of watch that and deal with your trade too at the same time. So S&P 500 also got our 3 lows. This is giving us our support into yesterday. And then we've got a 2B here today. Let me show you on like a different time frame. You can kind of see it over here. So I get our drop, congestion, second drop, main support. So our 3 main lows were earlier, then there's one way back in there. And this is a 2B here today into these lows, and that's what we're holding right now. We've got a couple of people that are saying, yes, I saw that. That's awesome. It is sinking in. It's also another reason I was not a fan of doing more on the short side there. So that's actually what we've got in play right here. You can see it stalled a little bit at that resistance that I told you guys about just a minute ago. It's a little bit of a stall. This is an 8,000 tick. You can see it better on the 500. So here was that measured move that I drew for you guys earlier. You can see how it stalled there. Basically formed an inverse head and shoulders and it's kind of pushing up a little bit more here. We are coming into that congestion back there. That's the next resistance level. Looks like we might do even try to do a 1, 2, 3 up into that zone, the way the momentum is. Kind of a messy inverse head and shoulders at the lows. Your shoulders and your head are not evenly spaced. But on the NASDAQ, I think it was the NASDAQ, that also did a 2B there. Yeah, the NASDAQ did. And so did the Russell. Both the NASDAQ and the Russell did a 2B at the low. So again, I'm looking for the zone to hold for a little bit, probably choppier action, upside to choppy action, not really looking on the downside yet, just because of the way this is kind of starting to round off here at the support. Got a little bit of rounding going on. Let's go look at our Forex market here. My charts are hiding. There we go. So euro-dollar, we've basically just been focusing on these two wave moves. We were coming into support last week, just kind of dealing with this chop in here. See a little bit of a two wave move here that's showing exhaustion as far as the size of the move into today's session. So this is going to serve as resistance here as we go into next week. And we're still at a really key zone on the weekly. It's kind of going a little longer than I would like for a breakdown. I'd like this to kind of try to pick up at least next week. So it's basically a do or die point here. This needs to break down next week in order to be able to sustain a really strong move to the downside. If it goes past that, it's just not going to be able to do that. So we are really at a do or die point on this weekly time frame. So we should see this range break and we should start to see a stronger momentum move as we finish up this month. Dollar yen, we're at some support here. This is just a typical average size move. You can see two waves to the downside. This is another shallow avalanche. So you can tell by kind of like the slower start and then it bases and then breaks down. So there's the 1, 2, 3. Here's kind of the extra move that we've got going on in the overall market here. So this is at a widening up zone at this point. So we'll start to see more back and forth here on the intraday charts. Larger weekly has room to go lower, but it doesn't necessarily have to. It's kind of trying to gain the momentum on the downside, but the way the placement is here, you will see sometimes where it will just kind of chop in here too. So right now, going into next week, I would hold off on much other than just scalps intraday and just kind of wait for that to see if it can go and do like a little base that can offer a continuation or not. But I would want to have it hold right down at that low for a week or so. You could even base a little bit longer and do an avalanche, kind of like a head and shoulders. Pound dollars, trying a phoenix. A little bit of tilted one. It's also at a do or die point, so it needs to go here. It's a sloppy one. So that's kind of like the longest you would want it to hold out into the 76.4. You can see with the 61.8 and 76.4% here, though they are lining up at that point. So it is reaching maximum level for trying to get that going. Am I seeing anything develop over the summer months from current action? Not like bigger time frame patterns other than some of these I'm watching for like the larger corrective moves. But the overall market is just going to be in a major correction, I think, for months. It's not going to be something that's just going to be like a one and done. I think we are due for much, much longer correction. JNUG, room for a slightly lower low and bounce. That's going to go along with gold too. So you're going to be looking at support in here. The ideal way for this to bounce is if it had V's and inverse V's. So you'll see it kind of is a little bit more of a time correction the second time around versus the price correction the first time. So that can more easily lead to a flush. Let me go look at gold quick. Hold on a second. I'll look at the futures. Sorry, I don't have a live gold chart on this computer, but I can copy and paste the move over. Coming off of the 2B on the 3rd. All right, let me show you guys what we got going on here. So we're still holding a two-wave correction. I'm going to post this for you. So we've still got a two-wave correction here. This is the support we were looking at over the last couple of weeks. The two-wave measure move here. So we're trying to continue to hold this level. So larger scheme of things, it's not a big shift, but it is enough it could take it into a longer base here. This kind of continues to round off here and pull out. So it is something that can gain momentum on the upside. And that, of course, will affect your JNUG as well. Weekly is in a wedge that is just tightening, but it's not extremely tight yet. It can still get even tighter. Dollar Swiss, this is an example of that shallow avalanche I was telling you guys about earlier. Actually, I'll show it to you intraday. So this actually has further downside. So see how it has the slow pullback, then the base kind of continues to shift momentum. So it has the pullback like that, and then like this. And then this usually will speed up further on the next move. It's basically at a do or die point right here for that. So this has more room on the downside. weekly is not as good. It's kind of messy because you can see it was trying to do the phoenix out of that wedge, but like I told you guys before, when you're getting a strong break to the upside, ideally what you'd want to see is a second low that kind of pushes things out. So you don't want the apex of your triangle to be close to when you're getting a breakout. When that happens, then the breakout can be just a stunted move, it can basically cause a trap. But if you're looking at a triangle and the apex would come together way out there, then you're usually going to be much better for a breakout type of move. So apex, for those who need geometry reminder, apex is the point at which these come together. So when you're looking at a breakout from a wedge like this, if it tries to break out here, it can more likely be a trap. But if on the other hand, you've got this longer triangle and it tries to break out in here, then there's more likely that it's going to be successful. USO. That daily on the dollar Swiss, by the way, that can actually go into a bigger tilted avalanche. So weekly, we're right at the very lower end of this resistance zone. Got the measured move up in here. It can go to slightly higher highs. Let's see the monthly. That doesn't really show me too much. I think this is going to try to push a bit higher. We don't have a core pattern here, but the way it's kind of forming into a wedge here has more room to pull up on this daily chart. You're probably going to be in a trading range here towards the end, going into the end of the year, but it can still pull up higher within that range. Yes, Canadian dollar. Still holding to try to push higher, just doing a two-way pullback. Needs to hold that zone to try to gain any steam. The daily and the weekly are just kind of iffy here. You can see there is still a little bit more room for this to pull up. It's just doing really slowly, and a lot of times when it goes really slowly like that, if the lower end of that channel breaks, it can give way really fast. So you'll see this slow creeping. If it starts to hug that level like that, that can break down really quickly. So things like 2Ts are good to watch here. That's actually what broke us down the other day too, really fast. Aussie dollar. Is trying to do tilted continuation. It's getting close to a do or die zone. Maybe you could have a couple more days. It's trying to do, again, price correction, time correction. So it's easier for that to break lower than when you get the opposite, when you get the time correction and then a price correction. Let's see if I show you guys an example of that. Well, I mean here, time correction, price correction has a harder time gaining on the downside, whereas price correction, time correction, faster drop. price, time, more rapid drop. Got basically a 2B here in play right now on the daily on the Kiwi. Good support from where that channel broke. So this is trying to bounce into next week. See that two-wave movement here intraday. All right, do you guys have any other individual things you want me to take a look at? We are holding the middle of that range on the indices here. Again, this is the congestion from earlier. So you can see it kind of pulled up a little bit more into that resistance zone there. There's still a little bit of wiggle room. But this should make things choppier throughout the rest of the afternoon. Walmart. Walmart looks like it wants to do a 2T on the monthly charts. It needs to push up more to get there. But it wants to. So I would be looking for around 110 or 111 to 112. Let's see here. So right around here. Not quite 112, maybe pretty close. So basically it would have to hold this zone right here, which is a pretty key support area. You got your two-wave pullback right back into the middle of the congestion. It would need to hold that level there. Go like that. And then that would be looking for shorts at that point. So it's a do or die point right here. You want to see how it reacts off of this zone. Breaks that zone, then it's going to probably plummet. So what it will be is it has the slower start. So if it kind of bases there a little bit, breaks down, that's probably going to gain momentum on the downside. It's right at, let me show you an example. So it's kind of like, quite that zone. Oops. Let's see, where's the one I was looking for. And kind of in here is a little bit of that idea where it pulls down. It's basically at the channel support zone. If it breaks, it can go faster. This isn't the exact one I was looking for, but that's the main idea there. Oh, here, this is it. So you got your two-way pullback basically at Walmart, and it's right at this zone. So it's at the channel zone where if it's going to try to go and push higher and gain and go into that higher high, it would need to do it at this point. So if you look at this and you compare this to Walmart, let's clear this. You're looking at this pullback here being a comparable level is right here. So this is a little bit different in here as far as how this is formed, but that's the basic idea of that zone. And then you're right about here, kind of steady up, a little bit of a shift there. So a breakdown, that's why this is such a key point here in Walmart. Breaking down from that zone can get that to turn around. But it would have to actually break it to confirm it, because until that point, we're still dealing with momentum like this. So you got your upside momentum and your downside momentum. That's what makes this a do or die point. A lot of times how I treat these setups are I will buy it and be aggressive with part of the position so that if it just doesn't get going, then I can go and even reverse the trade. A lot of times you might even have Fibonacci fan levels at that level. So a fan break can get you out of a trade too. Let's see if there are here on this one. Oops. I deleted my toolbar. I might have to move this, but squish it up there. So you're looking at here are the current fans that are holding. So you basically need to see it holding that zone, but these fans could also be moved up to here. So your main failure confirmation is going to be as this one goes. Will the money show presentation be broadcast? Yes, they are doing it, doing the webcast version of it as well. So those of you that are not making it to Vegas, you can go and view it online too. Let's see, did I miss anybody else? All right, I think that's all questions. Okay, you guys. So, what am I referring to? The money show expo is next week. So let me get you, let's see if I've got a link here for you quick, if you haven't signed up for it. Give me just a second. That's weird, Pat. You should have at least gotten the GoToWebinar one, because this isn't the first time you've been in. Forward focus. Huh. All right, guys, I am going to go ahead and stop today's recording, and I will pull up that invitation link for the Money Show presentation for you guys. So just stick around, and I will grab that for you.